Cryptocurrencies have obviously been, the speculation is that this is going to be the next reserve asset, et cetera. You know, the problem with cryptocurrencies in general, but specifically Bitcoin and say Ethereum, but primarily Bitcoin, is the volatility risk for central banks. As a foreign central bank, I have to hold dollars in some form to basically offset currency exchange risk for trade. That's all I'm doing. The dollar is weaker right now relative to other currencies. And this is an important point to discuss, which is the dollar doesn't get weaker by itself. It's weaker relative to something else. So I've kind of three choices to store my reserves. I can buy US Treasuries. I can buy gold because that trades in dollars. So it's effectively a dollar reserve holding. And the thesis is that at some point I could use Bitcoin. I think the risk that runs for Bitcoin, at least in its current form, we're not talking about stablecoins yet, is the volatility risk as a reserve currency holder of Bitcoin.
Absolutely. But there's another important factor. The reason why central banks are more than reluctant to hold Bitcoin is because if you want a reserve asset, you're looking for something that provides not just reserve of value, but stability to the liability side of your balance sheet, which is your currency. Bitcoin, because of the volatility, doesn't provide the stability that those central banks may require. There's another element. I'm not questioning Bitcoin from a perspective of many other things, but from the perspective of being a reserve asset for central banks, a central bank is a liquidity provider. Bitcoin goes against everything that a central bank is. Therefore, a central bank holding Bitcoin is basically like an arms dealer holding olive branches. It makes no sense. The ultimate problem for a central bank is not just the reserve of value, but also the fact that one of the things that you can do as a central bank with those dollars is to liquidate them and move them rapidly in order to address imbalances at the currency level in each of those countries. You cannot do that with Bitcoin.
Again, setting aside stablecoins, one of the interesting dynamics of stablecoins is they would be backed by Treasuries, which would provide another bidder for Treasuries if that would become the case, which would potentially be an ideal situation for a reserve asset. But you're buying a cryptocurrency that's backed by Treasuries, so you're buying essentially you're buying Treasuries for lack of a better term.
Yes.
So the bank just says, why don't I just buy the Treasuries and I get the yield on the Treasury?
Bitcoin and cryptocurrencies are going to be in a parallel universe to fiat currencies. In a way, cryptocurrencies and gold are those that actually set the limit of fiscal imprudence in governments. But it's obviously a new paradigm, completely different.
Catch me daily on The Real Investment Show. The link is in the description.